symposium or seminar panel discussion that we are holding jointly with the CII. And I want to thank the CII for organizing this panel discussion and also fielding some excellent panelists, knowledgeable people on the economy. The purpose of this discussion is to understand the where we are on the economic front and how we are moving ahead. We are passing through a very difficult time as a country. We have, of course, the ongoing health crisis, and we have the economic crisis, and we also have a security crisis. And I think the security crisis could get even worse, and it also has an economic dimension. So how do we deal with this triple crisis, which in turn has, I think, spawned some more crises at different levels. So it's really a situation of a crisis. But as they say, crisis should not be wasted. And the Prime Minister has been talking about using this crisis to reform the economy, not only to recover from this deep economic crisis, but also reform the economy. And they have used this tool of PM VIF Kalyan Yojana and also the Atmanirbhar package, both very substantial, and it protects the vulnerable sections, particularly the PM VIF Kalyan Yojana. And also in the Atmanirbhar package, there is a lot for the MSMEs and various other sectors like rural sector, agriculture. The RBI has also introduced a lot of liquidity. You are familiar with all that. And yet, of course, we are not out of the woods as yet, although the government is saying there are some green shoots. But when we look at the data, the government data itself, we find that the 8 core sectors of the economy are not doing that well. They're still in growth is in deep negative territory. We are also seeing that the RBI has expressed concern about the rising NPAs. So the health of the financial sector is also not that good. Of course, some sectors have reached almost the pre-pandemic levels of activity, but these are few and far between, and there's still a long way to go. So we will discuss some of these issues in today's panel discussion, and hopefully at the end of the panel discussion, we might be able to come up with some suggestions which we could share, as I heard Ravi Saniji saying, with the government. VIF is, of course, a strategic think tank, but we also have set up some months ago a Center for Economic Studies, and that is headed by Shri Gurumurthy ji. And the Vice Chairman of the center is Shri Rajiv Chandrasekhar, MP, who is today with us. And he will first listen to the panel discussion and then give his views towards the end of the panel discussion. And he is a part of, I think, the parliamentary committee on attached with the Ministry of Finance also. So some of the inputs which you might produce might be used by Rajiv Chandrasekhar ji to sensitize the government if he so wishes. So with that, I welcome you all, and I want to welcome, I thank Soma Banerjee for organizing this, and Shri A.K. Bhattacharya ji is here, who will be moderating the panel discussion. And he is, of course, a very well-known commentator. He's been part of many discussions. I've heard him on the television and other places many times. So we're lucky that he is here with us. And I would also request him to introduce the other panelists and start off the panel discussion. Thank you.
Gupta, for that introduction. I will straight get into the the business side of the session, which is that we will have a panel discussion on the subject being Indian economy today and future prospects. Let me try to set the background before I introduce the panelists. As we all know, even the background note points it out that the GDP growth in 2019-20 hit a 11-year low of 4.2%. The GDP figure for the first quarter of 2020-21, that's the current year, will be out later this month. And I would not like to speculate on the extent of the contraction. But contraction it would be. We have the RBI making that pretty clear yesterday in its monetary policy statement. And I would like to quote, and it said that taking into consideration the many factors that are impinging on the economy, real GDP growth in the first half of the year is estimated to remain in the contraction zone. And for the full year as a whole, real GDP growth is also estimated to be negative. And of course, they impose a lot of faith in an early containment of the COVID-19 pandemic, which may impart an upside to the outlook. But the downside risk, the RBI notes, is that a protracted spread of the pandemic will be a downside risk. But of course, the recent spate of high-frequency data, as our background note rightly points out, has shown some signs of improvement in May and in June, which reflected the phased relaxations in economic activity, peak power demand, e-way bill generation. They've all shown incremental improvement, but they are month-on-month improvements. But July saw a departure from that trend. Railway freight earnings were down by 12% for the week ended July 26, compared to a decline of only 7.7% in the previous week. Power generation in the week ended July 20 were lower by 2% compared to that in the same period of 2019. And a week later, that same gap widened to over 7%. But then, as I said, these are early signals. A clearer picture will probably emerge later in the month. A positive is on the employment scene. As on July 30, if you look at the unemployment rate measured by the Center for Monitoring Indian Economy, it gives an unemployment rate of 7.5%, which is actually lower than the pre-COVID monthly unemployment rate of February 2020. There is a concern over the quality of jobs that have been created, mostly in the informal sector, and also to what extent this can be sustained, but that we can see how it will pan out. The urban unemployment rate, however, has not improved as much as rural unemployment rate, in a sense that the urban unemployment level continues to be at a higher level than in the pre-COVID month of February. What about the future economic scenario? The RBI Consumer Confidence Survey provides a pointer. This survey was conducted through telephonic interviews with around 5,340 households across the cities of Ahmedabad, Bangalore, Bhopal, Chennai, Delhi, Guwahati, Hyderabad, Jaipur, Kolkata, Lucknow, Mumbai, and Patna, and Thiruvananthapuram. Now, what it says is very interesting. It says the consumer confidence had actually plummeted in July 2020, with the current situation index recording its all-time low. But the future expectations index, that is for the next year, is actually gone back into the positive territory, indicating signs of recovery for the year ahead. This is a very interesting survey, and I would like some of my panelists to actually comment on this. It goes into the employment scenario, it's going into the income level, it goes into their spending patterns. So while discretionary spending will increase in the last year, the survey says that there is no expectation of discretionary spending increasing in the coming year. Now, against the purpose of my talking and giving this background was to provide a kind of a pointer to our eminent panelists to discuss these issues in a broad three baskets. The first basket being what do they think is the state of the current economy from their sectoral or macroeconomic perspectives. And the second basket would be what are the immediate, whether it is the short term or the medium term measures that the government needs to take to achieve higher growth. The third basket would be where how the Atmanirbhar Bharat Abhiyan or the Atmanirbhar Bharat package, to what extent that will act as a support for the recovery process. Uh, Having said, giving you this background, let me introduce our panelists. Dr. Pranab Sen is here with us, who is the country director of International Growth Center, uh, one of our leading economists in the country, was a chief statistician for the government of India till recently. Then we have got Mr. Samir Gupta, who is the chairman and managing director of Jackson Engineers. He, as a person who has understood the MSME sector, he will provide us a lot of perspective on the MSME sector and, of course, on other important issues pertaining to the economy. We have Mr. Ashok Wadhwa, who is the Group CEO, Ambit Private Limited, who is kind of an authority on the stock market and the financial services sector. So he will provide us his perspective on these two critical areas. We also have Mr. Anuj Poddar, who is the Executive Director of Bajaj Electricals. It's a well-known name, and he will provide us the perspective on from the manufacturing or the manufacturer's point of view. And finally, last but not the least, we have Sir, who is the former chief executive of ITC and Welcome Hotels. We all have been discussing and reading about what the economic prospects of the hospitality sector is, and Mr. Haksar will provide his perspective. What we intend to do in the next 35 minutes or so is to have a discussion among our panelists, and I will request my panelists to actually make a brief, maybe 4 to 5 minutes preliminary comments on the three issues on Indian economy, and then we go into a short Q&A. And I would request those of us who have joined us keep their questions ready, and they may even post it either on the chat box or maybe send it to one of our coordinators, and they will come to me, and then we will be able to guide those questions to our panelists to respond to them. So with these words, let me invite Dr. Pranab Sen to make his opening comments. Dr. Sen.
Thank you, Mr. Bhattacharya, for asking me to open the discussion. I will be true to the format you have outlined and go point-wise over the three broad baskets that you talked about. So let me begin with the state of the economy. I don't think I need to elaborate too much on this. I think we are all agreed that at the moment, the state of the economy is really quite terrible. The problem, of course, is that when we set the standard as being what happened during April and May, we start seeing green shoots all over the place. That, I think, is a very dangerous sort of measure to get into. And one really shouldn't do this. The real question, as far as the state of the economy is concerned, in a sense, I think, takes us to that consumer expenditure survey that Mr. Bhattacharya talked about, the Reserve Bank of India survey. Now, what, if you actually interpret it properly, what that particular survey is saying is something which goes like this, that people have a very, very low expectation of the prospects in the immediate future, but a year down the road, they hope things will go up. Now, what this means in effect in terms of behavior is that people will say that since my income is likely to be restored next year, I will draw down my savings now to keep my lifestyle up. So what will happen is that there will be a resurgence in consumer demand up to a point. And that point is going to be determined principally by the quantum of savings that people have. Now, what we are talking about here are essentially relatively liquid savings, because savings which are tied up in physical assets of various kinds will not, at this point in time, other than perhaps gold, will not be disturbed. Now, as a result, we have, I think, a very finite time horizon, that if by then the economy hasn't actually picked up strongly, what would have happened is people would have exhausted their savings and they would then have to scale back their consumption expectations, and the economy would actually do a reverse. So you would see a growth happening and then it can abruptly reverse as people start running out of their savings and start revising their living standards down. This is what that survey is saying. And this sounds like a very, very likely scenario, and it's something that we need to be very conscious of. Now, as far as the measures that the government needs to take, and let me also sort of put in perspective the nature of the Indian economy. We all know, perhaps we forget sometimes, that the bulk of employment in India is created by the MSME sector. About 85%, well, not 85%, about 48% is in agriculture, and another 37% or so is in the MSME sector. Now, in the MSME sector, the income that is generated is essentially that which comprises the lower middle class in this country. It is this lower middle class which is employed in the MSME sector and is also the dominant consumer of the products of the MSME sector and the products of agriculture. This is really a critical component of the Indian economic system, which we talk about a lot, but we are not quite sure how to handle it. Fortunately, we have somebody who is a lot more familiar with the MSME sector than I am. But what I would like to flag is the real weakness of the Atmanirbhar Bharat package is that whereas it has given the modalities for production in the MSME sector to survive, it has done absolutely nothing to ensure that the demand is available. The availability of demand for the corporate sector or for agriculture is not quite that much of an issue, but the demand for the MSME sector is a serious concern. And if that doesn't pick up, then we are likely to see, as I said, a downturn. People are expecting a downturn in the future, and it is going to happen, and it's going to happen very strongly. And there's nothing in the package that I could locate that changes that in any manner. And that is what is worrying me. That's what I see the future as. So the government, in terms of what measures it needs to take, is that it should really start focusing on the kinds of public expenditures which directly creates demand for the MSME sector. And there are a lot of things that the government really does do. The MSME sector does have a fair interface with the government. And so those are precisely the kinds of expenditure lines that the government should be focusing upon. At the moment, the focus has been predominantly on keeping production alive rather than alive and kicking, and on essentially social protection kinds of measures, humanitarian measures to make certain that people don't starve. But nothing in the Atmanirbhar package, as far as I can see, is going to give the momentum for a sustained economic recovery. Thank you, Mr.
Thank you. Thank you, Dr. Sen. I think you have given us enough, sort of thought for deliberation in the next session. We have a lot of questions will come up on this issue. Mr. Gupta, if I can come to you, and since you are from the MSME sector, and you can of course talk about what the government has done, the economy's condition. In your view, is maybe you can give us your perspective on whether the Atmanirbhar package has been adequate in responding to the challenges that your sector faces right now. Mr. Gupta.
Thank you, Mr. Ashok Bhattacharya and Mr. Pranab Sen for setting the tone. A very good evening to all the panelists as well as the participants. Of course, there are three issues what we are talking about today. One is about the overall economy. Second is about immediate short-term and medium-term measures which we expect from the government. And third is about Atmanirbhar Bharat Abhiyan. So let me just share my very broad views, which includes some of the thoughts around MSMEs as well. On overall economy, as you also rightly said, I think it's a very unique year, undoubtedly, ever witnessed by human mankind, where health, infrastructure, and financial crisis is actually leading to economic, social, and security crisis. So there's something we have never witnessed. And while we are reinventing ourselves, and still trying to understand the new normal, we are all talking about new normal. There is no clarity what it actually means. It has become a Herculean task to predict or forecast what the future is going to be in short term, at least. And from business standpoint, at least, again, over short term, manpower, money, and material, all three are concerning. We have witnessed decline in domestic consumption clearly. Investments are pretty low due to uncertainty, that confidence is not there. And there is a shift towards increased spend on healthcare and hygiene. By the way, as we keep reading, entire world wants to move towards self-sufficiency, which is not going to be easy as we read. And having said this, supply chain will get diversified to what it was. And then there will be need for both local source as well as second source for businesses to survive, which of course is an opportunity for Indian MSME sector. To the point what Mr. Ashok Bhattacharya just made on the survey, clearly this year will be a challenge, no second thought about it. And as I say, this year is going to be a year of survival. And once we sustain this year, we will recover and certainly grow in the coming years. While we have seen some recovery over the past 2 months, but the key would be to sustain this recovery, what we have seen over 2 months for next 3 quarters. 2 months cannot certainly make us conclude anything concretely. I think agility to reconfigure, innovate, and leverage technology would be the key to success. We need to look at long-term value creation rather than having a short-term view. To my mind, that's what I keep telling people in my company, that look at a 5-year horizon, don't look at a 1-year horizon. We did various scenario mappings within the company, and we still are pretty confident that over a 5-year window, we will still be able to grow at a rate of approximately 10 to 12% as far as our business goes. To my mind, the sectors which are bound to grow over next 3 to 5 years again, or 2 to 5 years, are education, agro processing, infrastructure very clearly, e-commerce, digital services, data centers, renewable energy, telecom, and logistics. These are the sectors I think a lot of demand is going to come. Coming to the second issue, which is the measures we are expecting from the government to boost the growth. A very different point, my personal view, absolutely a personal view that I have, is that as a priority, we need to remove the scare of pandemic from minds of people while accepting the fact that all is not well. To fight this pandemic in near term, at least, since we don't have a vaccination available, I think the only way is to have discipline and precaution, which we need to practice in our daily lives. And for that, we need to have repeated awareness drives. Once this awareness is a lot more, government has been doing lots of things to create the awareness, not that the government is not making efforts. I think even private sector is making all the efforts. But I think once this clear awareness is there, this frequent and repeated partial lockdowns would come down, which actually is disrupting the economy a lot more and also adversely impacting daily wage earners. We have been hearing about demographic advantage of India since many years now. It's not only during the COVID time. I think now is the time to unleash, and we need to focus on skilling and reskilling programs. I do believe if we play our cards right, end of the day, India has got almost 18% of the global population. If we play our cards right, we can position India as a global resource for skills. The government certainly has announced a slew of measures which will help MSME, rural India, as well as farmers. However, there is scope to do a lot more. They got to be implementable. To my mind, we need to address issue of ease of doing business in letter and spirit rather than just having a structure or a framework. The critical factors that would contribute would be infrastructure very clearly. If you want investments to come into this country, taxes, quality of life, technological readiness, investor protection, cost of capital, labor laws, land reforms, legislation, corruption, and red tapeism. These, to my mind, are critical factors where we need to focus on. And I think in short term, if we are able to just focus on 2 or 3 critical factors, we can prioritize them. One is investment in infrastructure, and secondly is cost of capital. To my mind, growth will bounce back sooner than later. Also important is what's going to be important is intergovernmental collaboration, which is need of the hour. I think there is higher need of higher degree of coordination, cooperation, and knowledge sharing between inter-departments of the state and center, as well as departments within the states. So once this collaboration starts happening, I think that will also help us unleash the kind of potential this country has got. And finally, some thoughts around Atmanirbhar Bharat, which is, of course, a mission what our country has taken. Government has been pretty vocal and supportive of this flagship program of Make in India, which now has a renewed and a fresh look, which is mission of Atmanirbhar Bharat. Of course, the plan is long term, where we are talking about development of the country. I think MSMEs are making all possible efforts to demonstrate their resilience, no second thought about it. However, they still need access to capital, technology, and markets. There is need to further bring down cost of capital to be globally competitive by Indian MSME segment. There needs to be incentive and motivation for promoting use of new technologies, particularly digitization, e-marketing, etc. I think that's something which MSMEs would love to invest in, provided they have that access to both capital and technology, and some kind of a motivation and incentive. I think India has been importing significantly from China and other countries. Disrupted supply chain will certainly result in opportunities. There's no second thought about it. To promote Make in India flagship program, there needs to be conducive duty structure with objective of discouraging imports. That's something, to my mind, we need to do. We need to identify import substitutes and motivate MSME to get manufacturing for various sectors rather than just focusing on assembly of the end product. I think component manufacturing is where our country is lacking. We need to build brand India in certain sectors, particularly like apparel, leather, agro products, etc., and position our country globally. I think we need to increase our online presence. On part of industry also, I think there is some responsibility. There needs to be a commitment to focus on quality and productivity so as to be globally competitive. Yesterday, we were having a conference on zero defect and zero effect. I think that's a strategy which MSMEs need to sincerely follow. Clearly, it's a culture rather than a cost, and we need to focus on quality. The various case studies which prove that investment made in areas of energy, water, and environmental conservation makes the business more profitable, competitive, and sustainable over long term. Defense sector is another sector which has been in focus. Self-reliance in this sector can reduce huge defense import bills. However, we need to work very collaboratively to fast-track approvals of indigenously manufactured equipment, which today is a huge time-consuming process. Defense is a big opportunity, but generally, if you even if you make a prototype, it can take potentially 3 to 5 years for that to get approved. So I think we need to work around that process so that it can be fast tracked. Energy sector in specific is of interest to me. Pretty convinced that clean energy is the future of energy. Clean air, as we have witnessed in the last 3-4 months of COVID, also is not an option anymore. We need to invest in climate resilient energy infrastructure, which not only makes us self-reliant and gives us energy security, but it also helps us in creating more jobs, protecting environment, and mitigating possible risk of next health crisis. Clearly, we need to transit into lower carbon future.
Thank you, Mr. Gupta. I think we are sort of, if I can come back to you on you have raised many important issues, and I would like to come to you for the second round.
Sure, Mr.
I would like to go to Mr. Ashok Wadhwa and let us hear him what he thinks needs to be done and what is his perspective on the financial services scenario. The stock markets are going up and down these days, so maybe he will have a different perspective and help us understand what's happening around us. Mr. Wadhwa.
Gentlemen, I think the stock market, if one was to just look at the stock market, one would readily and easily conclude that the economy is far from being in trouble. But we know the reality is different. We are, the stock market on March the 23rd, in that particular week, dropped by a sharp 33% from its peak, the peak being February the 12th. And it's interesting that over this journey between May, June, and July, it's pretty much recovered 90%, 85% of the drop. We are now just 10% away from the peak. What has contributed this? Is this so diverse from the real economy that we can't believe it? The fact is that the stock market and the real economy don't necessarily follow each other. In this case, the stock market rise has been significantly influenced by liquidity flush between the United States, the European Union, and Japan. They have contributed so much liquidity globally that, obviously this liquidity needs to get invested and is finding its way into several emerging markets, including India. India has a 9% weightage on MSCI, which is the emerging market Morgan Stanley index. And therefore, the greater the amount of liquidity in the world, naturally, the greater is the allocation to India, even if the percentage remains intact. The Indian market at 23 times forward earning, 24 times forward earning, is not just the most expensive emerging market in the world, but believe it or not, it is probably trading at the highest forward earning multiple for all times in the past. And that's largely because the expectation is that the economy will contract. And if the economy contracts, obviously the corporate earnings are going to contract. And if the corporate earnings and Nifty earnings are going to contract, then clearly the multiple is seriously high. Whereas global liquidity in one sense is welcome. Here is one other interesting statistic. In the month of January to April, actually India lost FII money. There was more redemptions out of India than investments in India. So we were net payouts. But between May, June, and July, each of these months, there is a positive inflow, which effectively means that the global investors continue to feel relatively confident on the India growth story. Remember, market earnings are one single determinant. What is a larger determinant of attracting flows is really the potential and the growth trajectory that the company is expected to deliver and the corporate earnings are expected to deliver over a 3-year period. And therefore, one thing we can say is that the FII money, which is really a good barometer of determining the global confidence, is positively inclined towards India. It is telling us that India's ability to re-emerge out of this crisis and gain a growth trajectory is significantly greater and better than other emerging markets at this point of time. The other thing that has contributed to this exponential growth in the Indian market is retail money. And that's a little worrisome too, ladies and gentlemen. Historically, daily flows in the market have been in the range of 40 to 45,000 crores. If I look at statistics from May, June, and July, these numbers have gone to 55 and 60,000 crores. This 10 to 15,000 crores of extra liquidity going into the Indian market, unfortunately, is not coming from the large domestic institutions. They have actually net redeemed. It's actually coming from retail investors. And what's really happening is that as we all sit down and work from home, we have two screens in front of us. At work, most offices do not permit you to use trading as a pastime. Whereas at home, when you have two screens, you're working on one and you're really trading on the other. It's a little worrisome, ladies and gentlemen, because when retail goes into the market in such an unabashed manner, I worry about what happens when the market starts dropping or starts receding. It's the retail that gets hurt all the time. And the reason this is worrisome is because when retail gets hurt, it walks away and it takes a long time for the retail investors to come back. So for the sake of the future of the capital markets, I hope that the impact of COVID-19 is quickly addressed, that corporate earnings come back, and should the corporate earnings come back, then the retail investment will continue to flow in, and hopefully that augurs very well for the future of the Indian market. Just two other points on the market itself. It's not as if all the market, the broad-based market, is growing equally. Actually, if you look at it, the market growth is really determined by 5 or 10 stocks in Nifty. Nifty 50 is made up of 50 stocks. If you look at it, it's about 10 stocks on Nifty 50, of course, led by Reliance, followed by the HDFC Twins, Kotak, Hindustan Lever, ITC, Britannia, that are contributing to the Nifty shift. And therefore, it will be unfair to term this growth as a growth of the broader market. I would say we should term this growth as a selective growth. One of the key features of this interesting growth in the market is that a lot of capital is getting allocated to what we call good and clean companies. Companies that have good governance, companies that have good accounting standards, and companies where promoters have done sensible capital allocation are disproportionate beneficiaries of this real boom in the market. And that's good. It augurs well. In the past, unfortunately, when the market went through what we call a mini bull run, almost everybody used to benefit. Now the market investors and market participants are separating good and clean companies from the ones that are not so good and clean. So in the same sector, you could have a company like Kotak that's getting a 4 times book multiple, and you could have several other banks that are quoting at less than 1 time multiple, clearly demonstrating that capital allocation by investors is significantly in favor of good and clean companies. It's good because the future of Indian capital market is dependent on this and new companies that come with better and better practices, respect for minority shareholder, and good governance principles. So I would say that's broadly where the market is going. The market is also selective in terms of the industries which it is supporting today. Digital, automation, technology-led companies, pharma companies. It's very interesting. In the many bull markets between 2004 and 2018, pharma was completely absent. They did not participate in any rally. And in the last 12 months or last 3 months, I would say, largely because of the COVID issue, pharma companies have shown leadership in the movement upwards. Chemical companies, intermediary companies are the other companies that are doing extremely well at this point of time. Government support, I think both SEBI and RBI, I have to say, have been proactive and simply outstanding. We can sit here and pass commentary on what they could have done better. But honestly, in the manner in which SEBI has introduced forward-looking legislation, whether it was cutting down the period of rights. Can you imagine? Rights as a product was completely lost. And yet, in a period of 3 months, we have seen 10 or 12 really marquee right issues being offered in the market. That's largely because SEBI has reduced the whole formality related to rights issues from 6 months to literally 30 days, offering promoters an opportunity to consolidate their ownership, removing the 6-month guidelines for making preferential offers, some really far-reaching, proactive, remarkable changes made by SEBI. I would argue that RBI, in terms of introducing liquidity packages for NBFCs that are supporting MSMEs, and in particular, the legislation that they introduced yesterday for a one-time restructuring, are simply outstanding pieces of legislation. They do not take away the challenge that mid-sized NBFCs or the banking sector or those lending to MSMEs are finding, but they are giving them a solution which is far-reaching and which I think will bring back the health of these NBFCs and the lending sector quite quickly. Last issue on Atmanirbhar. I think it's a remarkable projection of what India can achieve. I would bring to your attention, ladies and gentlemen, that the first step of Atmanirbhar was actually launched in September of last year, when the finance minister reduced the corporate tax rate to 15% for companies that were going to set up new manufacturing units in India. It was a far-reaching implication. What it was saying was, we want the world to think of India as a manufacturing place. India has been an office to the world through the whole back office processing for a long time. But this was an opportunity to make India a supply factory to the world. My own submission is that unless two important changes are made, one related to land and the other related to labor, significant amounts of capital, particularly now that the world is suspicious about China, particularly now when the world is looking at alternate supply chain, particularly now when businesses can so easily be relocated and India can become an alternate source of supply. I would argue reduction in the tax rate done last year, along with changes in labor and land regulations, would augur extremely well for India to become a significantly large manufacturing base, not just to supply to our own demand, ladies and gentlemen, but to become a factory to the world. And if India can actually capitalize on that opportunity, there is huge amount of foreign capital available. We saw in these difficult times, we saw one visionary businessman raise multi-billion-dollar capital, which means capital is available for good Indian companies. We just need to demonstrate that we now want to use this capital, leverage this capital to build really significant supply chain to the rest of the world. Last point on infrastructure. Government's far-reaching implications introduced 2 years ago on InvIT and REIT are paying rich dividends at this point of time. Even in this environment, the Raheja REIT Mindspace got listed today. It got subscribed. It got subscribed 11 times, ladies and gentlemen, oversubscribed 11 times in this. So there's no dearth of capital. If you look at the amount of capital that Indian banking sector has raised, between HDFC, between Axis Bank, ICICI coming forth, Bandhan Bank, I would say India is a good home for lots of large investments. We just need to demonstrate our ability to be able to use this and deploy this in a more productive manner and deliver better outcomes. Thank you, Mr. Bhattacharya.
Thank you, Mr. Wadhwa, for painting this. It began with some areas of concern, but I think you have overall sort of painted a picture which is quite full of promise and optimism, which is take us to Mr. Poddar. Can I come to you? And you lead a company that is on the forefront of India's manufacturing. So why don't you give us your perspective on the issues of the Indian economy, the Atmanirbhar package, as well as what can the government do in the current situation to boost growth?
Sure. Thank you, Mr. Bhattacharya, and good evening, everyone. Just to tweak that, let me introduce that our company is in two large segments, right? One is the consumer products business, and the second is the EPC, which is infrastructure business. So let me first talk about the consumer products business and from the perspective of, the big question everybody has on consumer demand in India. And Dr. Sen referred to it briefly in his comments. Starting off this fiscal year, we were all on great tenterhooks as to how the consumer demand is going to be for this year. We knew we are into a long haul of, suppressed economic growth or negative growth and likely very adverse impact on demand for a long, long time. The lockdown started lifting up from about 17th of May in different parts of the country to different levels of freedom or marketplaces opening. From 17th of May till now, it's been about 3 months. And the good news there is the demand has actually come back very strongly, at least as far as our industry is concerned and many adjacent industries. So it may not be so much for travel or certain specific industries, but for many of the peers that I speak to, it has come down very strongly. In the initial few weeks, in the first month or first 1.5 months, we were all wondering, is this just pent up demand and a rebound? But 3 months out, I think it is not just pent up demand. You cannot have pent up demand lasting for 12 weeks. So we are continuing to see good demand trends on the ground, irrespective of what the macroeconomic numbers that I read in the media. And this, mind you, we are almost equal to last year's numbers through these, at least the last 2 months, despite the fact that multiple geographies, large metro cities, large urban areas continue to remain in lockdown. So I would say this aggregate demand that we're seeing is in a marketplace that is yet not completely open. So to that extent, I think that's a very strong sign. What's happened through July is that all our worries that were earlier centered around demand have now flipped over to being a supply side worry. So back in May or June, some of the interviews I used to give is that, don't ask me about supply problems. That's not my concern. My concern is demand. But today, my concern is no longer demand. It is actually supply. And that's because these repeated local lockdowns that I think Mr. Gupta also spoke about, etc., are severely denting the supply chain, disrupting the supply chain, disrupting reopening of factories, disrupting or leading to closure of many warehouses, port movements, etc. And even though they may be local in nature, the fact is that a national supply chain works on a national basis. The moment you have sporadic local lockdowns, the entire supply chain kind of collapses. And therefore, that is really a matter of concern that can burst the bubble of the economic bounce back that is there. And I think we seriously need to relook at how our approach to that. So moving on from the consumer business, let me talk about our EPC business, which is in the infrastructure space. In that business, like is the case for most players, it is largely a B2G business, and the government or the government agencies and enterprises are the main client. That has a completely different cycle. I think it really depends on government spending. The government has made various statements about spending and ramping up capex, etc. But to me, the whole question always is, and not just me, but industry, is not the spending in terms of an announcement, but the actual cash flow. The unfortunate challenge that most of the infrastructure or many corporates in the B2G space today are dealing with is that the payments from government or government enterprises or agencies or whatever they are has been a big challenge. The outstandings are at unprecedented levels, and this has been building up right since early 2019. So since the last year and a half, pre-COVID too, the cumulative outstandings of B2G or government, various avatars of government to corporate India at very, very high levels. And I think that's a matter of concern. I think the policy measures will not address, but actual cash flow will address that. If you just take that quantum of money, and in a way, if that's outstanding, that's money sucked out of the industry. If that money were to be repaid in an accelerated manner back to corporate India, that money is not going to go home to anybody. That to me is going to set the wheels of the economy much better, because that money will come back from us to the vendors, to workers, to coming back into consumption or capex cycle in some manner. So just with that, let me move to the question on government measures. I think there's three aspects the way I look at it. Number one is, how does one boost consumer demand? I think, Professor Sen and others spoke about it, so I'll not focus too much on that, but the government should look at measures to stimulate consumer demand. From an industry perspective, as large players such as us, I don't think we expect, nor should we, choose to expect government SOPs. I think government SOPs or measures or support should be focused on the one hand for consumers and the other hand for MSMEs, and that's perfectly fair. But the only thing we ask for is our outstandings to be paid and paid on an accelerated, timely basis. So that is something that we can put back into the economy. The third important part is the ease of doing business. I think that has been a very strong focus area for the current government since the last 6 odd years. I think they've made many measures towards that. Having said that, I think the ground reality is that there are many aspects of it that yet need ironing out. For benefit of time, I'll just talk about one particular aspect that the government has been focusing on. As industry, we're very supportive of that, which is increasing the quality standards and energy efficiency standards across the country, across different industries. So BIS and BEE are two bodies that are extremely hyperactive over the last couple of years to raise the bar on many of these aspects. This includes actually an agenda to create or impose certain non-tariff barriers in terms of, from a trade perspective. I think as organized industry, we are very supportive of that. But the reality is that on the ground, this is dealing or leading to a lot of challenges in holding up business in many ways in terms of the execution of these standards. And I will not get into too many issues, but I don't think we've equipped ourselves in terms of lab capacity, in terms of turnaround rate, in terms of just executing and governing these standards rollout. And in that sense, I think MSMEs more than us are most impacted because they are the feeder industry and who has to comply with a lot of these standards. So that's just a singular example I'll leave right now for the ease of doing business. Let me quickly cover a couple of points on Atmanirbhar, and not in terms of a package, but at a broader concept level. I think the way I would like to understand and define Atmanirbhar is not a regressive, thought process, but I think it's a very progressive thought process of making us economically much more stronger as a country. If you take that definition forward, I think the wrong answer to that is to move into a protectionist approach or shell, which is like a pre-91 era. I think the right answer, the right approach to Atmanirbhar is about making ourselves much more competitive on a local and a global scale. And when we talk about becoming more competitive, then the question really is why are we today not most competitive in any particular sector when compared to any neighboring or other country across the world? The answers there lie in various parameters, whether it's taxes, whether it's cost of logistics, it's infrastructure, it's cost of power, cost of borrowings, and labor productivity in our country. So our policy measures, therefore, by definition, need to address all of these elements to make us more competitive as an industry and attract more manufacturing into India. I think many of these are spoken enough about, so rather than speak about all of these, there's two aspects that I'll talk about, which I think is not covered today, is cost of logistics. Cost of movement of goods in India is anywhere between 50 to 80% higher compared to comparable countries. And a lot of that, if you delve into it, it's a share of road transport versus railway transport, our time taken at ports, our quality of infrastructure that slows this down and adds to the cost. And I think that clearly is an area that private sector or individual corporates cannot fix, but that's where the government really needs to have greater focus to increase our local competitiveness. One of the key areas the government, I think, is doing a great job to boost manufacturing in India is the incentives that they rolled out for manufacturing. They started with the phased manufacturing program for mobile phones. I think it's been a few years, and I think that's greatly successful. Recently, in April, they've announced many more such incentives for electronic subcomponents. They've announced production-linked incentives, etc. I think that's a very progressive, correct step and correct approach to actually boosting Atmanirbhar Bharat. So if we can now expand these incentives in a targeted manner to selected sectors where we choose to be global champions in, I think that's the way forward. Last point there, I think Ashok and the others, spoke about it. I think we should look at COVID as an opportunity. The world is looking at a China +1 strategy. Can we make sure that we are the +1 and not a Vietnam or not a Thailand? And what is it that will make us more attractive? And iron out all of these inefficiencies or elements of that will make us more competitive. I think we have a great future ahead of us over the next 5 to 10 years. I think this is an opportunity we must not miss. So I'll park my comments at that point.
Thank you, Mr. Podar, for those very, very sharp comments. Thank you. Let me go to Mr. Haksar. He represents the hospitality sector, and we have been getting reports, hearing reports on various factors that are impinging on the growth and sustainability of the hospitality sector. Mr. Haksar, is over to you.
Thank you, Mr. Bhattacharya, Mr. Sen, members of the panel, ladies and gentlemen. I just want to add that it is the tourism, travel, and hospitality sector, because it is all this last sector that we look at, and not only the hospitality sector. I think we are the worst affected as far as the COVID crisis is concerned. Our industry is based on derived demand, so we are first to be impacted and last to recover. We have been, largely the transient demand has vanished, and we are finding that both the inbound travel, the domestic travel, as well as the shutting down of the businesses have caused an enormous stress to the industry as a whole. The RBI recently in a survey has also said that the tourism, travel and hospitality has been most severely affected of all the sectors. In 1819, we handled over 10.5 million tourists. There were about more than 5 million visiting NRIs, 1.8 billion domestic tourist visits, and over 26 billion outbound travelers. In Forex earning, we contributed almost $28 billion. We are finding that as the cash flows have completely been frozen and are likely to stay for the entire year 2020, recoveries are going to be extremely slow. Now, when we estimate the direct and indirect economic impact of the tourism industry in India, we are approximately 10% of GDP, actually 9.2%, but I'll round it up to 10%. So that roughly puts the full year economic multiplier, a value of tourism in India at about 20 lakh crores. We are expecting that this recovery will take about 12 to 18 months, provided that the vaccine has been found, etc. So what is the collateral damage to the industry from the pandemic? We have been revising our projections. The projected loss for the sector for the year ending March 21 is now estimated to be about 15 lakh crores from the initial projection of 5 lakh crores in March. Our first guidance, just calculated in the share to the government, had put the economic value at between 3 to 5. It's now between 10 and 15. Similarly, when we look at the tourism sector, contributes about 8.2% of the total employment. It has about 42 million people who are part of the industry. We estimate about 70% of workforce are at risk. Cumulative job losses for the full year, both in organized and unorganized sector, which was earlier estimated at 2 crores, is now been revised that it will go up as high as 4 crores. Given that the virus is progressing, tourism supply chains have broken down in India across all key inbound, domestic and outbound markets, and is not expected to recover for the next 6 months to 18 months. This value covers the whole spectrum of the tourism value chain: airlines, travel agents, hotel, tour operators, amusement parks, restaurants, transportation, tourist guides, etc. So this is really, in short, the current state as where we are. So we have been presenting to the government 3 very key factors. One is that, yes, we need to survive as an industry. We are going through an existential crisis. We will go through a revival phase and there will be a growth stage. Tourism industry, both directly and indirectly through its multiplier effect, has the capacity to stimulate demand in many ways. It is at this point that we need a support. So we have put the 3 basic points that I'd like to cover. One is that we certainly need urgent fiscal support. We need some empathy as far as that is concerned. Secondly, there is this human capital, this human job losses. There's a large unorganized sector that we are ourselves trying to understand, and we need a white paper to understand this 70% of this unorganized sector, self-employed, rural communities, women who are working, drivers, who are somehow not part of this organized 25-30%. What can we do about them? What kind of strategies that we can have to integrate this? This is the time now to really look at this unorganized part. And the third part is, how do we generate demand? How do we create demand? And in that, I think it's a great opportunity once again to relook at the entire spectrum of our strategies, tourism strategies, at 10.5 billion, we are not even 1% of the world tourism share. I think there is an opportunity for us to relook at the whole ambit of the tourism policies. We don't have a national tourism policy. The draft is still being made and finalized. We can have a national tourism board, for example. We can make our GST much more competitive to attract people to coming from abroad. We are a fraction of the MICE, meeting incentive events, global share. What can we do about it? But having said this, how do we create ourselves to be future ready? I think the key for our survival at this point of time is going to be this resilient domestic base, domestic leisure traveler, which grows 28 million. Can you imagine? We only get 10.5, but we get 28 million people going abroad on holidays. What can we do to incentivize them to spend their money within the country, to see the country, our flora, fauna, beaches, mountains? We also need to really relook at some of the policies. For example, on visas, how we can rationalize visas, how we can ensure that India has a very low share of the Himalayan, we have the best of the mountain range, but it's Nepal and other places that people go to. We have opened the 126 peaks. What can we do now to immediately incentivize people through ease of visas to build a calendar itinerary so people can start coming over there? So I think there is a lot of potential. And secondly is the business traveler. 30% is leisure, 70% is a business traveler. Indian business segment, business traveler, has the potential to provide some stimulus and some support to the tourism sector. So as far as the fiscal support is concerned, there are three parts. One is at the central level, the other is the state level. We have been engaging very closely with the center level. We engage on the MSME segment, because 70% again of the tourism sector is in the MSME. We worked through representations to revise the MSME criteria, to increase it from 100 crores to 200 crores, from investment of 25 to 50 crores. And I believe that that has brought in some semblance of hope and support to those businesses that fall in that category. We have been asking for a 12-month moratorium because there's no cash flow. You have no finances to pay for anything. Forget about salaries, interest, other working capital. What can we do about it? So moratorium was very much asked for. We also said that it's time to do restructuring of loans also, one-time restructuring of loans. So that is absolutely, we are a capital intensive as well as people intensive industry. So the governor's announcement of what he announced yesterday on the restructuring is a welcome step. But now we are waiting for the guidelines to emerge as far as that's concerned. We have been also going to the Ministry of Commerce on various elements of service export scheme, how we can immediately get some benefit of this. There are some amendments we're seeking on export commitments. We are also looking at it. Fundamentally today, I think the first step is, can we open our hospitality sector? Can we open our hotels? It is so frustrating when you have the Ministry of Home issuing guidelines almost 40 days away to allow hotels to open, and state governments are dragging their feet. Delhi is an example. And now when the Delhi state government, after cajoling them and representing them, we are finding they're caught between the governor and the chief minister. The hotels are still not open. So it's time that we first allow hotels to open. You have opened the airlines. Where will the business traveler who come, where will he stay? You are opening international flights where you're asking the people who are coming in now from international, if they have the COVID certificate, they don't need to carry with them. They don't need to be quarantined. You need to open hotels. So I think the first is that you need to open hotels. The second part is that the state governments have a lot of role to play. And I think it is where we seem to have lacked the bite. We have, for example, have asked that we need to immediately look at a deferment of 12 months in all statutory dues, reduction of property tax, municipal taxes, huge excise license fees. We have already paid for 1.5 crores per hotel excise fees. We have said, can you please adjust this amount for the remaining for the next year, 2021? So like this, there are a lot we are saying there are a lot of licenses and permits. How can you look at automatic renewal of licenses? The idea is that, listen, any outflow right now is impossible. People don't have the money because there's no revenues coming in. We are working with the Ministry of Tourism to work out a campaign in which we can talk about how safe our hotels are, how safe our tourism destinations are, and how we can weave these stories into creating a viable product both for domestic tourists as well as for international tourists. I don't want to, at this point of time, say the international tourists should be shunned away. Short-haul destinations we can attract and we must attract. Prime Minister has said about Buddhist tourism, we are 0.75% of the world share of 400 million Buddhist tourists. What can we do about it? How we can?
Yeah.
This and much more is the opportunity for us. But right said, survival. If we survive, we can contribute to the economy as we move forward.
Thank you, Mr. Haxa. It was a very exhaustive, outlining of the crisis and the challenges that your sector, tourism, hotels, and hospitality sector, are facing. We have unfortunately run out of time because I think we have almost come to the end of it. I have time for only a couple of questions, and I am tempted to ask this question to Dr. Sen, Dr. Pranab Sen, which is that one is arising out of his observations, and the other is arising out of two different observations on the same issue. The first one is, Dr. Sen, you talked about the need for creating demand for the MSME sector. Can you be precise in what specific way can probably the government can create demand for the MSME sector? That's question number one. And question number two is that if I understood Mr. Gupta correctly, he was advocating import substitution as an idea going forward, while Mr. Podar talks about why protectionism is not a way forward. Could you, as an economist, of your stature, could you please, throw some light on this controversy about import substitution and protectionism? Because this is being debated, and a word or two on this, your perspective, will help clarify many of these doubts. Dr. Sen.
Thank you, Mr. Bhattacharya. Well, let me get to the issue of creating demand. The MSME sector, as I had said, has a unique characteristic that once it starts rolling, it does create its own demand. It's a very labor-intensive sector. And once income flows start happening, it feeds back into further demand for the same sector. The question is, how do you kickstart the process? Now, the government does already have a policy of preferential sourcing from the MSMEs, right? But again, I think somebody mentioned it. I think, if I'm not mistaken, Mr. Gupta talked about it, or was it Mr. Poddar, that payments are not being released. And this has been a major issue that the MSME sector has been flagging time and time again. payments must be released and must be released fast, particularly for the sourcing that is done from the MSME sector. That's number one. Number two, it is possible to increase the ambit of what is sourced from the MSME by the government. So that's one dimension, which is the direct purchase of goods and services by government. The second is on infrastructure. I don't think anybody disagrees that the right way to come out of this crisis is a lot of public investment in infrastructure. Now, again, let's accept facts that there are large infrastructure projects in which the MSMEs practically have no role to play. And then you have small MSME investments, which are almost totally dominated, small infrastructure investments, totally MSME dominated. It's the latter that one should be focusing on. So, we should not now be talking about national 8-lane highways. We should be talking about upgrading existing highways. We should be talking about state and rural roads. We should be talking about district roads. We should be talking about urban renewal kind of projects, slum upgradation sorts of things. So there's a whole bunch. It's all very construction related. But again, the nature of construction and who does the construction has important implications in terms of the backward linkage. And it's those backward linkages which eventually drive the MSME process forward. Now, as far as the issue that you talked, that the disagreement about whether we should be more protectionist or not, I tend to be on the side of saying, be a little careful of protection. I accept the fact that a certain degree of protection is desirable for the MSME sector. The problem is, as we've learned from our own history, is that import protection becomes selective. And you may actually end up making just the wrong choices because it's driven much more by individual interest groups rather than by an overall economic perspective. Now, if the government can resist individual lobbying and you raise the overall, the average level of protection across the board, it may not be a bad thing. But if you're going to pick and choose, the likelihood is that you're going to get it wrong and you're going to create a mess that took us nearly 15 years to get out of. So I would say protection, yes, but not protection in terms of individual products. That is a very, very slippery slope.
Okay, thank you very much, Dr. Sen, for clarifying this for all our participants, because this is one issue where a lot of debate has taken place. Unfortunately, I wanted to ask a few more questions to our panelists, but we are actually completely run out of time. I think we had a very, very useful discussion in terms of the panelists' preliminary observations, even though we could not ask too many questions. And there were a few questions which are more by way of comments from our participants. What we can actually summarize, how we can summarize this session is that it's a session that gave us an interesting insight into what is actually happening in the economy right now. There are interesting observations and very valid points made by all our panelists, particularly with regard to the need for demand creation, the need for being careful in approaching the path towards whether we should want to be protectionist or not, and how Mr. Poddar particularly was very interesting, where he talked about the need for clearing outstanding dues, which is an issue which I remember even Dr. Sen was in the early days of COVID, he used to always talk about. And if outstanding clearance is still an issue, it is something that clearly needs to be looked at closely. And the supply side management, in the sense that Mr. Poddar talked about demand not being a problem, but it is a supply which is a problem, is something that needs to be looked at. Mr. Wadhwa's points about how retail investors need to be looked at a little more closely, because once they walk away, they don't come back easily. And his analysis that what you're seeing in the stock market is a reflection of a selective growth, not a broad-based growth, is something that we all need to be very, very watchful about. Mr. Gupta talked about the need for providing cheaper capital. I hope the RBI governor is listening to him. With these observations, I would now conclude this discussion and hand over the stage to Mr. Rajiv Chandrasekhar, who is a member of Parliament in Rajya Sabha and also Vice Chairman of the Center for Economic Studies in VIF. He will make his concluding remarks, and he will take it to the end of this session. Mr. Chandrasekhar.
Thank you, Mr. Bhattacharya. Thank you all for having me here. It was obviously quite interesting to hear different people speak about where they find themselves in this post-COVID or during the COVID situation. Let me, I won't give you a long treatise on my views, etc. But let me just tell you from the get-go, from the third week of March, I have been involved as part of VIF CII and as part of a small group within the party in engaging with multiple stakeholders within the economy and with the government, and have been, in a sense, if you want to call it that, a spectator to the process that the government has laid out. So I may be a little biased, but I think I'm not incorrect. That I think the government has approached this precisely in the way it should have, because one of the realities is, and I tend to meet many economists as part of doing this job, and that is what I call a job risk. With no offense to Dr. Sen, meeting economists can be more confusing than it solves anything. But one of the things that we must all understand here is that there is no conventional economic theory that is at work today and can work today. No economic model today for India or indeed the world can predict the impact of the volatility of the lockdown, the pandemic, the impact of the pandemic on consumption and manufacturing and production. So I want to leave that point there just so that everybody understands that we are all flying, in an aviation term, we are flying IFR. We are flying instrument. A lot of people have a lot of very strong views about assumptions and presumptions, but effective net sum result of all of this is that economic policy making currently has to be calibrated, has to be careful, has to worry about downside risk management more than rushing in headlong into big bang solutions that may have been the norm earlier, especially during 2008. So that's point number one. I just want to also say to you, just so that everybody is aware, and some of you are already aware, the government's response on this has been really along three lines. One is what I call the soft landing, and this is a phrase that I believe VIF CII created, which is soft landing the economy as the economy sharply contracts. Then there is a rebooting of the economy, which is the second phase, and then the third expansion phase, which is the Atmanirbhar Bharat. Now, these are not three in sequence. They are happening in a sense, if you map them to a time scale, they're happening with some amount of overlap. Some things are still soft landing, some things are rebooting, some things are expanding. Now, the government, therefore, has looked at this as three broad elements of policy making and handholding. Now, if you look at the soft landing part of it and assume for a minute that soft landing is more or less done We have managed to soft land the economy through the combination of moratoriums and so on and so forth without any real visible damage to the economy or to the real economy. What we are now grappling with, and what Dr. Sen talked about and Dr. Anuj and Samir talked about, is the process of reboot. Before I get into reboot, let's be very clear around the table on one thing. The Atmanirbhar Bharat, the opportunity to massively expand the Indian economy, reform the Indian economy, is a real opportunity. On that, I don't think anybody here needs to be even remotely diffident. I am, as somebody who's been an entrepreneur for the best part of 30 years, and I believe that India has never had an opportunity as unprecedented as this. And I won't bore you with the China argument and the supply chain movement argument. Anuj has already said some of that. But I genuinely believe, as does the government, and as I think most people, that the Atmanirbhar Bharat is a once-in-a-lifetime serious opportunity to create a new Indian economic model and a completely, a serious momentum into our economic expansion. I will add here, before I go back to talking about rebooting, that I believe that the government's view of Atmanirbhar Bharat is closer to Anuj's than it is, I think, Samir's. This, nobody tells you this, but this is something that we can surmise. The vision of this government is to create a globally competitive, self-reliant economy. This is not about going back to some kind of a competitive autarky. I think Dr. Sen's worries are legitimate worries, but are perhaps misguided because this hasn't been defined or maybe have been put out there in public narrative by some people as a protectionist approach. It is not. It is about creating an economy that is globally competitive. It is about creating supply chains that can compete with and take market shares away from China. So you can't take market shares away from China by saying you're going to be an autarky or you're going to be a protectionist economy. So I have absolutely no doubt in my mind that Atmanirbhar Bharat, the underpinning, the philosophy, the thinking behind it is to really reinvent, rebuild, and expand the Indian economy around the basic concept of being globally competitive. So I won't say very much more on that. I'll come back to this concern about rebooting. And I'll just take 3 points. One, I think Dr. Sen made this point about MSMEs. I think the way to look at the MSME problem, and I have engaged with a large number of MSMEs for significant amount of time, and have been, I think, part of the process of giving policy inputs to the government from the MSMEs. The MSMEs, please understand, are a part of an overall supply chain. Some MSMEs do sell to consumers directly. Some MSMEs do contract directly. But to a large extent, MSMEs are part of either a global, wider global supply chain or a wider national supply chain. And what MSMEs require now, and which is what the RBI has done yesterday, is to basically signal the revival or the support package to reboot the non-MSME portions of the economy. As Mr. Haksar said, and maybe hospitality is not really the real example to take here for MSMEs, but it is the consumers of MSMEs, which are the larger businesses to whom the MSMEs are part of the supply chain, that need to be kickstarted. So I think the RBI is made the first step about saying, we will restructure your loans. We will give you the confidence that you can start looking forward for the next 2 years and start making your investments. The other two issues about consumption, this issue of consumption has been talked about a lot. And I'll just make a point, and I don't want to get into a dispute with Dr. Sen. He knows numbers and data a lot more than me. I personally feel that the challenge we have today, when we look at June being 85% of pre-COVID levels, July, despite 2 big cities under lockdown also being part of 85%, that we are back to pre-COVID levels in terms of broad consumption and broad production. What is missing currently is the discretionary spending, the discretionary consumption part, the big ticket item, the purchases of cars, the purchases of other luxury goods and other high ticket items. Tourism has clearly fallen off the radar. Travel has fallen off the radar. So I think more or less the real economy, by bouncing back to 85, 90%, if we can bounce back by August or August, September, just before the festival, to about a 90% level. Then we go into the festival season, and if we get into 100% and the peaks that we see during festival normal, where we get kickstart discretionary spending, I think consumption will be back online. But I completely agree that there will be a net reduction in the GDP of this year, whether it's 20 lakh crores, whether it's 10 lakh crores, whether it's 15 lakh crores, we will see at the end of the year. Whatever the number be, I am willing to stick my neck out here again, Mr. Bhattacharya and all of you, that we will get back to this 2.7 trillion GDP sooner rather than later. Now, I am not a great crystal ball guy, and nor am I an economist who can make the numbers speak the way numbers ought to speak. But I have a reasonably good sense about from decades of entrepreneurship on which way this is tracking. So I would stick my neck out and say by 21-22 end, we will be in the ballpark of back to 2.7 trillion. Now from there, and if we are doing that, if we do that, therefore the slope for the year 21-22 will be not an unreasonably expansionist slope. The growth will be pretty significant. And if then that is the tailwind that we have, then we have a good visibility for the coming years beyond that. But I accept the argument that people make and has been made here and has been made outside, that the process of rebooting is still fragile. The green shoots, I would again I would disagree with Dr. Sen, that the green shoots are not imaginary. The green shoots are green shoots that point to the fact that the residual pent-up demand is moving towards close to 100%. So 85%, 86%, 1 month after a lockdown is not insignificant. So that is a form of green shoots, that economic activity is intact, economic activity is resurgent. But the process of reboot is not complete. And I will, I've got some inputs here. I don't claim to be part of the government. But I think the VIF CES has done excellent work in the last 2.5 months, and we've had some traction in terms of, sort of engagement with the government. The finance committee of which I'm a member is engaged on this topic next week, what needs to be done, etc., etc. So these inputs are valuable for me. But I would end by saying I think the atmosphere should be positive. I'm not usually a flag-waving cheerleader of the kind that you usually see, but I am inclined to believe that our rebound and our reboot and our performance post-COVID will be significantly superior to most other economies around the world, and it will be a lot more sustainable. Thank you.
Thank you, Mr. Chandrasekhar, for this wonderful, concluding comments of yours, which places